Hey, this is Jeffrey Camus with StockSmart with another edition, the January 27, 2021 edition. And again, we can't get enough of it, but the short squeeze, and obviously retail investors can't get enough of it either, as a short squeeze is again prevalent today with AMC, which was about 65% short heading into today, bouncing up to a high of 22 in the pre-market and has been hovering in between 14 and 15. Again, getting played heavily by the red edit traders who have kind of grouped together. It's sort of like Fight Club for stocks. This group of people that are essentially trying to change the way that trading is done and kind of exposing these hedge funds, which do sit in a cloak of silence, if you will. I mean, they essentially, because they're not regulated by the SEC, because they're private investment vehicles, private institutions are allowed to do things sort of secretive. And the reason that is because they have what we call a credited investor, which is someone who's got over $1 million to invest or net worth. And the SEC and the regulatory authorities, they look at these people, these investors, as people who should know enough about the risk, so they don't have to regulate these entities. So hedge funds are allowed to pretty much operate in a secretive way. When these short positions generally are taken by a lot of these hedge funds because they have to come up with creative solutions to beat the market. And if they're just going to return the S&P 500 return, no one's going to pay the 2 and 20% returns, because in hedge funds generally they'll charge you, where a normal management agreement might be 1%, they'll charge you 2% and then 20% of the earnings. So in order to justify those kind of large charges, hedge funds have to be a little bit more creative. And so they do that, and they get to those places by, oftentimes maybe when there is a holding period where a stock is not able to be sold, they might short something on an IPO when that holding period's up, and you can get insiders start to sell. And that's a clever way for them to pick up some gains in a cheap way, because those stocks usually get sold pretty quickly on IPOs with insiders who are looking to take gains and get some money when they've been underpaid as they work there with the incentive to be part of the stock sharing program. So these hedge funds, by the way, are just getting absolutely destroyed right now. If you read any of the news, if you right now in Google, one of the most searched items is shorting or shorting of stock. And so it's a topic that's gaining in infamy right now. And essentially, again, today, AMC was one. GameStop is still doing crazy things. Fubo is heavily shorted. And that's a position that I actually like the stock. I mean, it's going to bounce around. You have to be careful if you're going to be investing in it, because you know that at some point these shorts will want to sell and get out. But those stocks are definitely getting taken to the cleaners if you're short. So again, it keeps going on. And so now we're seeing some of the trading places like TD Ameritrade said that they're going to be rejecting trades, which seemingly is them, making their own legislative or their own laws, which they are in charge of what they allow to do. I mean, they can refuse service essentially, but when people have positions in their account and they're sitting there waiting to make trades, you're kind of at a disadvantage if you're not allowed to get out of the positions. And so for them to kind of on the fly judge what is right and what is wrong, and I guess what they're saying these people who are trading at I don't know if you're trading on Robinhood or these retail investors, are saying they're uneducated, which is always kind of what Wall Street has said about the retail investor. They're like, oh, you don't know what you're doing. This is for us big boys, And so that's kind of what has always gone on. And really, they shouldn't really police this and be able to judge one from the other as if someone doesn't have the information, because fairly right now you have all these, if they're Xers or Ys or Zs or whatever generation they are, they're all educated. All that information is out there. And if somebody's willing to dig really deep, you can find things about companies that may interest or, turn you into an investor or get you excited about something. There's a lot of information out there, much different than 30 years ago when, you had to go to a library to research or something like that to pick up maybe a periodical from another city. But nowadays, you can pick up all the information you want, and these investors are educated, and they know what they're doing, and they understand what a short is. And people, because of books like The Motley Fool, One of the very first books that I read when I wanted to get in the industry, and I am a financial advisor, by the way, one of their books that I read many years ago when I was in my 20s, people are knowledgeable. They understand what's going on. So the idea that somebody has to regulate or police them is kind of unheard of. And really, who needs to be policed or maybe opened up are these hedge funds that are using insane leverage. A hedge fund with $1 billion could have 10 billion in the market because of leverage. And that's really kind of crazy. That's really where the market gets frothy and creates problems. It's not these individual retail investors who, maybe they're using some of the leverage in their accounts to make trades, but it's these hedge funds with billions of dollars in the market that creating the problems. I mean, if you look, anybody who's seen the movie The Big Short, that was done by banks. That wasn't done by individual retail people. That's always who they put the blame on, and they want to charge them with the problem now. But I'll tell you, this is very much like what I would call the fight club of stocks. You have a bunch of people ganging up from Reddit who are on this bulletin board, which is really great. It's actually really kind of interesting. It's funny. I saw a post from someone who posted $25,000, and they were showing that they were paying their student loans. And I guess they haven't heard that Biden might forgive some of those. So maybe they were a little bit too quick and early to pay those. But I did see someone on this bulletin board, which is on Reddit again. It's a fantastic bulletin board. And they keep, it's pretty funny because they keep showing, it's called Wall Street Bets, and I'm sure you've heard of it. So Wall Street Bets, they have funny pictures of of some of these hedge fund people or these noted shorters, and they're talking about them going bankrupt, and they have these pictures, and it's one is this is a face of a man days from bankruptcy. And so it's kind of interesting. That's what's going on in the market right now. So in the next couple of days, I'm going to start answering Q&A. So we're going to have questions and answers coming in from other investors, other people who want to know what's going on in the market, and I'm going to be receiving those and trying to answer those best as I can. If you have one, you can go on the site here and hit the contact and send me a question, and we'll try to get to it. Have a great day, and we'll talk to you for this edition. We're done. This is Jeffrey Camus for StockSmart signing out for today. We'll talk to you soon. Bye-bye.